Hello everyone! Today, let's talk about a very useful technical analysis tool, the MACD indicator moving average convergence divergence. MACD is a widely used tool in stock market technical analysis, commonly used to capture trend changes and reversal signals. With MACD, investors can determine buying and selling opportunities. Let's dive into an actual example to see how to use MACD to determine the right moments to buy and sell stocks. What is the MACD indicator? MACD consists of two main lines. DIF, the fast line. It represents the difference between the short-term EMA exponential moving average and the long-term EMA, reflecting short-term price changes. D, the slow line. It is the 9-day EMA of DIF, reflecting the long-term trend of the market. The MACD histogram represents the difference between DIF and D. The height of the histogram shows the strength of the trend. When the histogram is positive, it means the market's upward momentum is strong. When the histogram is negative, it means the market's downward momentum is strong. Two main signals from MACD. Golden cross. This usually indicates a buy signal when DIF crosses above D. Death cross. When DIF crosses below D, it forms a death cross, typically signaling a sell opportunity. Changes in the MACD histogram. When the histogram shifts from negative to positive, it typically signals that selling pressure is easing and buying power is increasing. When the histogram shifts from positive to negative, it usually means upward momentum is weakening and selling pressure is rising. Example: let's say a stock has been in a consolidating uptrend for the past few months. We look at its MACD indicator. When the stock price is at $45, the DIF line crosses DIF from below, forming a golden cross. This suggests the stock might enter an upward trend. A few days later, the stock rises from $45 to $50, and the MACD histogram turns positive, indicating that buying momentum is increasing. However, after the stock reaches $55, it begins to pull back. The DIF line crosses below the D line, forming a death cross. The MACD histogram also becomes negative, signaling that upward momentum is weakening and selling pressure is increasing. At this point, the stock enters a downtrend, and investors can sell based on the death cross. How to use the MACD indicator. Confirm the cross signals. When the DIF line crosses above the D line, it forms a golden cross, which is a buy signal. When the DIF line crosses below the D line, it forms a death cross, which is a sell signal. Observe the histogram. When the MACD histogram moves from negative to positive, it suggests the market could start an uptrend. When it moves from positive to negative, it suggests the market could enter a downtrend. Combine with other indicators. MACD is often used together with other technical indicators, such as RSI or candlestick patterns, to enhance the accuracy of the signal. Set stop loss. When the MACD forms a death cross, investors can choose to sell and set a stop loss based on the price pullback.